Good, you can make it to the channel today. Okay, perhaps you have not noticed because you often use your debit card to purchase groceries at the supermarket, say Asda or Tesco. Notice what? That the price of milk, butter, and bread, etc., have jumped up in the past months. And you notice it when you could no longer buy the same item the day you dash into the supermarket with a loose change, and you realize you could no longer buy the same milk for 80p because the prices jump up to £1. Now you realize the price is jumped up by 20p. And not just the milk, virtually all the items you used to buy at lower prices are now selling at higher prices. And you wonder why. Well, it is what is called inflation. And you start to query what caused it, why, and how. Well, stay tuned. Let us examine the 3 W's and H, and I will do my best to simplify things. Also because of my friend FARAJALA. I hope you remember him. So grab a cuppa. Of course, I mean a cup of tea, and then subscribe. Thank you. That's it. Given the intro about inflation, one could say inflation means a rise in price of all commodities and services. Consequently, it could mean or translate into a decline of purchasing power over time. Essentially, inflation is the process by which currency lose value over time, making the price of consumer goods increase. And when people cannot afford basic commodities like bread and milk, well, it could result into protests, riot, etc., as we now witness in some countries in the year 2022. Meanwhile, there are several definitions of inflations based on the key element embedded in it. However, let us examine cost-push inflation. And cost-push inflation occurs when the rising price of input goods and services increase the price of final goods and services. Please note the word final goods. Okay, perhaps FARAJALA is a bit confused, or let's say some of my audience want me to break it down. Okay, stay with me. Let me explain further. You see, a good example is when in this year 2022, the Organization of Petroleum Exporting Countries, OPEC, and its allies on February 2, 2022 agreed to keep moderate rises in oil production, meaning they would not increase oil production. Consequently, the price of petroleum rises and put upward pressure on the price of final goods and services. Okay, what are final goods? Good question. To inform you, the final good is what you and I use, the essential products we use perhaps daily. Products like diesel fuel, gasoline, kerosene, paraffin wax, petroleum jelly, and all plastic materials, etc., A rise in the price of all these listed items translates into inflation. And this takes us to the next question. What triggers inflation? Well, one good, simple answer is the excessive printing of money by the government. Okay, why would government print more money? Good question. Well, let me give you 3 reasons. 1, to try to stimulate the economy in the short run by making borrowing, spending, and investing easier. One could say a good example is during the early stages of COVID-19 when all businesses were shut down and US government printed a lot of money and gave it to people as stimulus, and that to encourage spending and to stimulate the economy. 2, to try to provide easy funding to cover government deficit. 3, to prevent deflation. Okay, here's the key takeaway. Printing excess money is one of the main catalysts of inflation, and it often leads to devaluation of one's currency. Now, let us examine the issue of rising interest rates. What has it got to do with all this? Good question. You see, the central government of most countries often deploy or employ the use of high interest rates to reduce the impact of inflation. How? No worries. I got your back. Stay with me, let me explain. That said, you see, why would government raise interest rate and what are the consequences? Essentially, the central bank use high interest rate to reduce or control inflation. And the Fed or Central Bank of England always or perpetually trying to keep inflation at 2%. At 2%. And when the government raises interest rate, the overall effect of this action are felt across all sectors of the economy. How? Well, it often results in creating fewer jobs and lower wages, and it causes stock price to fall as we experience, as we have experienced the third and fourth quarter of 2022 when S&P 500 and Nasdaq fell. That said, from the look of things and based on what I just explained a few seconds ago, it seems the logic behind rising interest rate is not a good idea. One would think. Well, not really. Okay, let me break it down. Meanwhile, please take a sip of your coffee. Relax. Okay, I'm back. Let's say the Fed or Bank of England increase interest rate. You see, when this happens, all commercial banks in the UK would benefit from this action. Banks like Barclays Bank, Abbey National Bank, Access Bank, Bank of Scotland, ABC International Bank. Why and how? Okay, you see, if and when all these banks, commercial banks, keep all their money with the central bank, they earn more interest on their money than lending it out to companies or individuals. And if they lend it out to any person or company, they will charge very high interest rate to compensate for the interest they will have realized with the bank, with the central bank. Okay, a good, easy example, another good example is your mortgage. If, for instance, you have a variable interest rate, where the interest rate you pay is linked to the central bank interest rate, then raising interest rate will affect your mortgage, meaning you pay more, and if you don't want to lose your house, you will adjust your spending. In effect, you will not have more money to spend on other items, hence less spending. Consequently, businesses will be careful of increasing the price of their goods and services because they know you can't afford it any longer. And again, when the interest rate is high, entrepreneur will find it difficult to borrow, invest, and create jobs. Consequently, it will result in fewer business and economic activities. Okay, here's the key. You see, fewer jobs and lower wages translate into less money to spend by most households. Therefore, the strategy of rising interest rates discourage spending and slow down economic activity because only fewer jobs are available with lower wages, hence reducing inflation. But please note, economists believe that bringing inflation down at all costs could result in recession. Hence, they believe a little inflation is reasonable to keep the economy going at a reasonable speed. Okay, please pay attention to this. Have you noticed the trend of change or event, if you like? Well, to inform you, everything seems to be interwoven like a vicious circle. Inflation, reason for inflation, and rising interest rates. I hope you find the content of this video useful. Here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon. Thank you.